Welcome back everyone. This is our bi-weekly update on the oil market. WTI's price remained rather steady at high levels in the first 2 weeks of May, even though many fundamental and economic updates seem to surround the oil market. Today's report will be focusing on the most recent and relevant updates in the oil market as we aim to support traders with valuable information to trade. An interesting report by the International Energy Agency provided some useful information on the current circumstances in the oil market in terms of demand and supply globally. Speaking of global oil consumption for the second half of 2021, the figures were left roughly unchanged, mostly because of the challenging circumstances currently taking place in India. World oil supply was higher in April and is expected to increase further in May as the OPEC Plus group seems more comfortable now to ease output restrictions. We must note OPEC may increase production after a year of keeping production considerably tight. The IEA also commented on oil price action in April moving into May, stating that robust industrial activity and coronavirus vaccinations are in place to support fuel demand. Very importantly, the IEA found that even as supply is expected to be higher moving into the second half of the year, demand for oil is expected to surge tremendously, probably much more than growing supply. Moreover, the OPEC May 2021 report was also released in the past days, once again providing an insightful view on the world and the industry. OPEC's view on the global economy was, in our opinion, very encouraging. The OPEC report made reference to the US stimulus packages and the rebound in Asian economies, noting these happenings as a strong foundation for the oil market. For world oil demand, OPEC suggests an increase by 6 million barrels per day in 2021, a figure remaining unchanged from last month's estimate to average 96.5 million barrels per day. On the contrary, OPEC revised downwards oil demand for the first half of the current year due to worsening circumstances of the virus spread in countries like India and Brazil. On Wednesday, the 12th of May, the EIA weekly crude oil stockpiles figure did not provide the market reaction that was expected. The figure was a minor drawdown of minus 0.43 million barrels compared to the large previous drawdown of minus 7.99 million barrels. On the other hand, on Tuesday, the 11th of May, the API weekly crude oil stockpiles indicated a considerable minus 2.53 million barrels drawdown as opposed to the previous minus 7.69 million barrels. Once again, no major price action was observed, implying the market's focus was upon the release of the pre-mentioned reports to make decisions on trading. Also, a much talked about matter in the past days that has no significant impact on oil prices yet was the shutdown of the biggest US fuel pipeline, which came under a cyber attack previously. This displays how vulnerable the oil industry can be to such attacks, and the event could even be used as a notable warning for the future. Finally, another matter that is crucial but has no impact on the oil market yet are the tensions between Israel and Gaza. Market participants are currently observing military tensions in the area while fears over the matter are on the rise. This is an ongoing situation, yet the tensions may have intensified lately. Moving now to our technical analysis, please note this is WTI's 4-hour chart. On the 12th of May, WTI tested and breached our R1 6540 resistance, which made way for the R2 6550 line to be tested thereafter. Please note, the R2 was last tested back in March and in our opinion represents a sturdy level to overcome for the bulls. Higher, we have also taken note of the R3 67.60 level, which was tested only once in 2021 in the beginning of March. The levels we have prepared in case a selling trend is to arise are these S1 64 support that was tested many times in the past weeks but seems to be holding up so far. Yet we would like to clear that this level is rigid and could cause the bears to act extensively in order to breach it downwards. Lower than that, the S263 line is also considerable as it was last tested towards the end of April, while the S36190 is also standby if the bears are willing to dominate the scene. The RSI indicator below our chart has made a decisive turn downwards but did not manage to reach 30, implying some selling orders may have been closed for the time being. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.